Hi guys, so welcome back. Today we're going to be talking about imbalances. So I do everything a little bit differently than everybody else does. Actually, to be honest, a lot differently. Because I have back tested so I learned like everyone else for about 4 years, and then I found out that it wasn't consistent. I would make really good wins and then lose right after. And so I just realized it's not a consistent system, and the stuff that I was learning was not consistent. So I back tested for just over a year and figured out, like within prices and stuff like that, a more simple system and very effective and very profitable. So I will show you how I do imbalances and what to kind of look for. So imbalances to me are when there is a surge of buy orders and a certain structure does not get retested. So for example, I'm just going to point out some. So we have one here. So this structure essentially, so this ended up breaking here. So we had a test in here. This was manipulation. It tested in and went up from there. But there was once it broke above, there was no retest here. So what that tells me is eventually it's going to come down and test that structure. So when price is reversing from a major structure from the top, I know exactly where my long-term target is going to be, essentially. So here's an imbalance. We can identify this on the 4-hour actually. So the imbalance is right here. Okay. So then, so we continue up, we have a ton of buy orders, and then essentially what ends up happening is it ends up reversing from here. So if we look left, we can see why it's reversing. So as you can see from here, if we measure, this was like 950 pip move from that specific price. So it tested in and reversed. So this had two reactions. So in the previous video, I was talking about two reactions. This had two reactions and then ended up dropping. Okay. So just by looking left, if this price, so we'll get the price from the left-hand side. So this price right here, if this price ends up respecting, which it did, it ended up closing, had two reactions, then we know it's an immediate sell, okay? So there's a couple areas in here that are imbalances. There's one right here. So again, it doesn't get retested. It just shoots up. There's one right here. There's a couple, but I'm just going to pick out like the major ones essentially. So here, 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 and here are all the imbalances where price has to come and fill, essentially. So when it's ready to reverse, and we can look left to figure that out, then we have, multiple targets, okay? So for example here, if we looked on the left, which we did, and saw that that was a big rejection, we can basically line it up to take a sell. So your price point would be 84.5 is where you would be looking at, okay? So let's say, for example, let's say you miss the 84.5, okay? Because sometimes that happens. And another thing, creating alerts, guys, is so important. You don't have to go fishing for random trades every single day. I actually highly recommend you don't do that because it makes you so emotional when you get it wrong and you're just like rushing into the trade. It's a lot of anxiety. You have to pre-plan your trades. That's how you're going to get very consistent and you're going to get a very good risk to reward setup. So just by looking at this, knowing this is a 900 pip drop, I know this is going to be a nice setup. So ahead of time, before it even gets to that point, you can create an alert, for example, at what price this is at, so 84.5. You can create that alert, and then once it hits the 84.5, you look for the reactions, and then you can get in the trade rather than just fishing. Now, let's say, for example, you miss the 500. Obviously, we're going to take a sell on a lower time frame. So you can go 30-minute, you can go 15-minute. What we want to do is honestly have that major zone on the 4-hour, monitor it on the 1-hour, and then you can take an entry on any time frame if there's not enough price action. In this example, there was enough price action. This is 1, 2, and even 3 we got, right? So if you miss the 500, you can just count down. So we have a minor structure here. And we have another minor structure here. So we have 3 price points. So when you go down on the 10-minute time frame, you can basically see small, quick little break and tests. So even here, so here's the top. So that was the major structure. This was a break and test here, here, and here. Now, as you can see, sometimes it'll go further up and then close. It's fine because of the fact that if you missed it at the 500 and you wanted to get in on 391, let's just say, your stop loss can be super close. It technically could be 10 pips. Like I said, I prefer 15 to 20 just in case it does spike. So give it a little bit of room, but regardless, even if you got in a little bit too early, as long as you're focused on those price points, you can still get in if you miss it at the top. You just count down to other structures. And then even this, even if you entered here and it ended up coming down and coming up a little bit to retest the structure, it's fine, because if you entered here and you're just in a little bit of drawdown, it's not a big deal. Okay. So there's always a price point entry you can get in case you miss it at the very top. So that's the best part about it. So once you do find your entry on a smaller time frame, all you have to do is go back up. So as you can see, you're just breaking it down in between. Now, the more that you get it off the major zone, the better, because you just have more to work with, and you have a bigger risk to reward, obviously. But I'm just saying, if you miss it from the major structure, just count down to other prices and you can still get in on a lower time frame. So realistically, what we're looking for, so let's just say we got in at that 391 price. So right here, let's just say that you were prepared for that. Then you put your stop loss above, let's just say 15 pips. And then we were looking for our target. Now, when we look on the 4-hour time frame, we have all these targets below, but we have to make sure it's ready to go. And so that's why you want to have multiple targets in mind, because the worst thing is when you have a massive target, like this is 373 pips. You have a massive target and it doesn't hit. You get very frustrated and you get anxiety and all the emotions come, and that's the worst thing ever. You want to be able to manage the trade properly and master your emotions completely. And the more experience you have, it gets easier and easier. But I'm just saying, you want to manage it very well. You don't want to let your emotions get the best of you. So this would be my first target, realistically. And then I have the price points in here where it closed. And then, so this would be my first TP. So this price first, and then the second price. So I would have to make sure that this structure does break. So it ended up breaking and testing and then spiking up a little bit, coming down. And then I would have this in here. This would be my next target so this ended up breaking and testing, and then it came down. Came down here, and then look how well it tests into that price just from the left-hand side. So these two prices have to break in order for it to continue down, because if it doesn't, it'll go back up. Okay, so it continues down further. Great. So we can just look from the left and keep continuing to carry it down, essentially. And you can put your exact prices in there. So again, these two prices have to stay below in order for this to continue down. Now, if we go on the 1 hour, we can see that there was a massive surge in price here. So if these two prices can't break below, it's going to go up further to fill that. Okay, nope. So see how it tries to break above, it's correcting, but it can't break fully above. So there's no retest here. It closes, tests in, and then starts to break above. So then it continues down. Okay, great. So this is our next major target, which it did end up hitting, which is great. Now, these two prices, essentially 682 has to break in order for it to continue down. Now it's dropped 367 pips, so it's normal for it to correct a little bit. So let's just see if it does. Yeah, so it's starting to correct and go back up because of the fact that it dropped for so long, it tested in. But the beauty of this is it tests in the same prices every single time. So whatever happens to the left repeats to the right, okay? So now we have this massive surge of orders. We have massive surge of orders here. All of this has to be filled. So it's the same sections that need to be filled once this is ready to close, okay? So basically what ends up happening is it has a huge manipulation spike. It spikes past that specific price. So let's just see if anything's on the left here of that top wick. Let's go up to the 8-hour. Okay, daily. All right, so that top wick, so it was right here. So it was basically a break and test, but nothing like too crazy. But the point is that it tried to manipulate buyers to come into the market. So they tried to get buyers to come to the market. They tapped into, so you know what's funny? This is a 500 mark. This is also a 500, like to the T. So went to the next 500 mark, ended up retracing. Now, some people would be like, oh, you know, like, how would you take this sell, let's say, okay? Sometimes you can go down to the 5-minute or the 1-minute and you can actually take it. But this was extremely quick. You would have to really, really be prepared for this. So if you're not, it's fine, because what you can do is you can just take it off the same price you took it off previously and catch it at the exact 500 and get that price action. So it manipulated, and then as long as it closes below, you can take another trade at that price. So basically what ends up happening is it tries to close below, it tapped into this price, and then it can't break. So then it goes up further, and then it respects this structure, closes below. So we need to close below in order to sell down. Okay, so here at this 500 mark would be our entry right here. So as you go down on the 30-minute, you can see that break and test. This would be our entry point. And then you put your stop loss above. Again, such a personal preference. I do 15 to 20. You can do whatever you want, as long as you're not getting stopped out all the time. So same targets apply, okay? Because we want to make sure this is ready to go down. So my first target would be these two prices, see how it tapped in very nicely. I want to make sure that it's going to continue down, or else I have to take profit, obviously. So what I would do, you can add in extra prices to make sure they break below and to make sure this is not coming up. If it does, it's going to be a break-even trade, or you're just going to take a little bit of profit and then get back in as well. There's so many ways. That's what I'm saying. You need to know how to properly manage it. So if it stays below this price, it's going to go down, but see how, so it ended up testing in, it came down, it couldn't fully break, and then it starts breaking above. Okay. So either once it retraces from that first target, you either take profit, or if you can see that it keeps breaking above, it would just be a quick trade. It's okay. You're like, everyone thinks like the trade has to be perfect every trade you take. It's not going to be like that. You're going to catch some really good setups when you create alerts. And then the ones that like, are, for example, not trending well, or a little bit choppy, or whatever the case is, or like it's not ready to trend, those trades are going to be break even or quick profits. And that's okay, because you can re-enter. That's the beauty of this. There's always other opportunities. So if this closes below the 500, we can take an entry. So as you can see, this ended up testing in. So if we go to the 15-minute time frame, you can see, so this was a quick reaction, but you can see it here and here. So there's two reactions essentially. So near the 400, 425 essentially. So even below that, you can just count down. So from 500 to let's just say even 450, that's 5 pips. So if you wanted to get in there, you could. But as long as this 500 is closing, that is your signal that you could enter. And then once you take the short, so let's just say you got in at 450. Once you take that short, you can set your stop loss and then go back to the higher time frame and then look for your target. So same target applies. These two prices have to break in order for it to continue down. Okay, so it breaks. So sometimes it gets really annoying when you keep entering at major structure and then it comes up and then it comes down, comes up. When it does that, I just avoid that pair for that specific week. And then I move on to something that is trending because it just gets too annoying. And especially if you're in my time zone where the times are in the middle of the night, it's just so stressful. So it's better to just trade when the pair is trending. So this ended up respecting, awesome, retested this minor structure, and it's ready to go. So it reacted to these two prices. As long as these two prices hold below, then it will continue to drop down. Okay, great. So it continues to drop down to here. To here, it reacts perfectly, and it actually is retesting here. So as long as it stays below this 81.9 area, then it will continue down. Okay, so it retests and then comes down to this next little section here, right here. So it comes down to the next section. This was actually an imbalance, no retest here. Huge buy orders up. This got filled right at the bottom and then it corrected. So this price here has to break below in order for it to continue down. Okay, so we had one reaction, two reaction, and it can't break below. So then it starts correcting. This is normal because again, you have to measure how long has it been dropping. It's been dropping, 328 pips. Okay, so that's a lot. So it needs to correct and different days are coming in. So this was Tuesday and then, okay, that was only a day later. Wow, that was fast. So this was Tuesday. The next day is Wednesday. It's correcting. That's fine. Okay, so it has two reactions here, 1, 2. Technically, you could enter another position here if you wanted to. Again, you can enter this whole freaking trend as much as you want. Just make sure you're on, the right direction. You're in the right direction of the right trend. But yeah, right direction, I should say. So this was one reaction, two reactions, and then it ended up reacting. So if it retests into here, then it will continue down, but it has to break below these two prices in order for that to happen. Okay, so it retested in there, it went to the next price. This has to stay below or else it's going to come back up. Okay, so it stays below, it retests all these prices. So the first position that you have here, you can just keep extending. Eventually, this is already a 1 to 20. Eventually, you want to take some profit. That's fine. You can take all the profit and just re-enter down here. It's totally up to you, whatever works, whatever is most consistent for you. Anyways, so then it continues down. All right, so here is where it stops. So it's at 81 even. 81 even, it tests in, and then it starts reversing back, okay? So as you can see, we have all these targets. We have all these major targets down here that eventually have to fill, and it will, but you have to do it in levels because it's not that fast, right? So eventually all these levels will fill. Just give it a second. Actually, this was such a nice imbalance. So here, so it came to this next major structure that we have here, filled this imbalance, had 2 reactions, and then went up. So this created a massive imbalance, big surge of buy orders. It came to the next structure, closed below that price. This is another entry opportunity here. Making sure that it closes below 436 and 290. And then basically, like, this is such an easy target just by looking at this. And then I think this is where it comes and fills the whole thing. Let's just see. Yeah. So it takes some time. So that first was Tuesday, and then this was a week later, another Tuesday. So you have to have multiple targets in between all your majors, because the fact that, we'll have corrections on certain days, they want to bring it up to a better price, and then they continue to add sell orders and buy orders depending on the direction. Now, there's things where there's certain scenarios where they will make imbalances, and I find people do this a lot. Like, I see this on Instagram. Obviously, people trade imbalances way differently than I do. And so, some people just may not know, but basically they'll sell here thinking that this will fill, and then they get stopped out. And then they'll sell here thinking all of this will fill, and then they get stopped out. So imbalances will not fill if the original direction is bullish. Like, it's obviously bullish. It's not going to come down all the way if the desired direction, as you can see, is bullish. It will only fill when it comes up to a major structure and then cannot break higher, and then it starts building down. That's the only way it will fill. So you have to be very, very careful of what the direction is, number one, and then identifying, even if it is a bullish market at that time, you have to figure out, okay, on the left, what's a major reversal, which was that 500 mark. And then also the 500, that 500 here was the major reversal. It manipulated and then closed. So you have to pinpoint the major reversal areas, and then when it's ready to reverse. And then that's when your imbalances will fill. Imbalances are honestly just like extra confirmations for your targets. But yeah, they work very, very well. So I hope this helped. Let me know if you guys have any questions, and right below in the comments, please like this video and subscribe.